Matron, take them away.
Okay guys, hope you're well. I'm just messing around a little bit this morning, twofold really, and I'd really appreciate your feedback on this. I'm looking at the way that I lay out sort of the channel when I'm talking. I like this graphic that we're talking at the moment because it highlights me, it shows the branding and gives you a little bit of blurb about decent brokers, that sort of thing. I think it looks nice bringing it into the modern world. However, when I'm sort of looking at other bits and pieces, people like to see my face. So this was developed where it fits the big screen, but I'm off. But sometimes this is a little bit small. It might be all right if I'm just discussing something quickly, like an overextended candle. But if I'm going to mark up, what might be nicer for you guys is that where I'm still on the screen so you can relate to the voice, because that's the thing, they like human voice. I did try to get it into a little circle, but it went a bit tits up. Work in progress, but that seems to work. And then you can still see what's going on, etc. on the chart as I'm moving it around. Okay, so let me know if it helps, because essentially what I do YouTube for now is mainly just the group. The channel's not growing at all, so my focus is you guys, and it's why I gave up a couple of days trading just to spend time with you and trade. The time is there available. Wednesday and Thursday, I've got to do my job, or Tuesday, Thursday, I've got to do my job. The rest of the time is for you, and I genuinely mean that. And I do it because I want you to succeed. I genuinely want you to succeed. If I didn't, I'd just be a YouTube whore, and I'd go for whatever, but I'm not. My videos will never be like that. Do I want to see it grow? Of course I do. I enjoy the process, but I enjoy interacting with you a lot more, which is why I do this. Now this is highlighting something that I'm seeing and I want to show you. You may have seen a screenshot that I put into the Discord this morning where I highlighted a number of areas. This ain't working. So one of them is doing 200 trades a day, and I says, all right, are you making any money? And he's talking his big game, but he actually makes fuck all. And this is the thing, you can watch all of these YouTubes and they're popping up all the time and they're throwing big figures at you. This is the way, and they're using all the big buzzwords that's around at the moment. I won't do that unless I'm directly asked to do it. It's just hype and trend following. But is it trading? No, not even feckin' close. All right, let me show you something. If I look at the video that I did yesterday, and I showed you a little bit about cable and to be wary of the news and one thing and another, it was feckin' hard work yesterday, right? It really was. But the one thing that I often hammer home to you lot, and you can talk about the new concepts that are out there and one thing and another, it's not new. Nothing is new in trading, not a thing. You see people talking about the way the daily candles are made up now, the highs, the lows, the midpoints. I told you years ago about daddy levels, right? High, low, open, close, mid. 5 points of attraction that the market will push to pretty much every day. Why? Because it retests and it looks for orders that were left behind, etc. Markets will also naturally gravitate to a meridian, a midpoint. Why? Because that's how Fibonacci works. It works in ratios, and ratios can be repeatable. Told you about the cosmos. How many stars is in the cosmos? And when you look at them, they look random. But they're not, because if you look at the Milky Way and the spiral, it is a 618 golden ratio. So that is a random event with a repeatable process inside it. You can take that cosmos and the Milky Way and superimpose it onto a seashell. They're identical. So that is random events with a repeatable, mappable process. That map can be put into the Mona Lisa's face. It is the most perfect 618 face on the planet. That's why it's allomatic. It's the way it is. 618 repeats in everything. It is in plants. You look at the way petals are. They are 618. So if you know this and you follow mathematical equations, then the charts can be mapped out. So there's nothing new. When you talk about stop hunting, doesn't exist. All it is the bank's positioning and inducing orders in order to fulfill their orders. That's it. You know, it's just them being better at the job than you are. And power is not knowing what someone else doesn't. It's knowing what someone else does. So if you can see something and you know somebody else is looking at it, that's your edge. That's your power. But what are they? Well, it's constants in the chart. Those constants are levels. Why? Because history repeats itself. Self-fulfilling prophecy. And that's what I wanted to highlight here. If we look at this chart, I marked out a range. This is as far as the market can go. Why? Because it was based on the ATR. The ATR can tell me from midnight whether it's going to go high or whether it's going to go low. If it's in a trend day, that's about as far as it's going to get, unless it's exceptional. Where did it go to? Bang to where the range is. That's the range of the day. How do we know? Well, it pushed up, hardly went anywhere, and then followed the range straight on. Look at the stall points in recent history. Almost to the pip. Came down, stopped. Bang on this level. When it went up, it found it on this level. When it came back, it's on this level. When it slammed through, it found a mappable ratio, a Fibonacci. Map. Slammed through, found GoldenEye, which is bang in the middle. What is GoldenEye? A mappable ratio between two fixed points. Came back up, stalled, slammed through, stall, back to this, straight back down, found the level. What do we know? Stalled in and around the midpoint, which it's done before, GoldenEye. Straight back up to a constant. Bang, news comes in. Where's it find its floor? Well, what do we know? A mappable ratio. Stalled on a constant, down to a constant, down to a mappable ratio. We know the range of the market because I'd already pre-marked it. It never got any further, and when it tried to come back, went to a mappable ratio. So on its journey back up, we have an overextended move. Now, what's an overextended move? It's an accelerant of pressure. Now, that pressure can be either to the buy side or the sell side, and you can get a lot of confusion when you start looking for different elements. This ain't difficult, guys. You have two fixed points here. One there, one there. Put your fib into the equation. Pull that fib down. There are your fixed points. Now, inside of this, you can start mapping out what that move can potentially do. Well, this tool can give you a stop, an entry, a risk-free, a take profit, and an absolute end if you so wish. How does that work? Well, if you're entering on the 23, if that breaks that zero, or if you're brave the 127, you're wrong. Get out. Enter. Hit your 38, you are risk free. Hit your 50, you can take profit. Hit your 61, you can be gone. It's a mapped process. You don't even have to go to 61. You can go in, risk free, out. In, average, 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 average. I'm wrong, out. Mappable process based on what you can see. How do you map this out? Very, very simple. There is a constant line here. We don't need indicators, you know, and this is for Michael. Little salute to you. Let me show you something. You need your levels. If the price holds above that level, in other words, comes across and holds it for an hour, you've now got an entry criteria, 23. As soon as you get a break above that 23, you go from 23 to 38 to get into the trade. And then from the 38 to the 50, you've got an exit criteria to get out of the trade. Now you might have enough money from here to here. Get out. What else can we use? We can use the constants of the chart. Fixed lines. Why? We know they are bounce points, clean bounce points. I get in, I get out, I've got a barrier, I'm not going to risk it, I'm going to just bail. That's it. Small, safe trade. What else have we got? Well, we've got a key fib here. Get in, risk free. I'm definitely getting out here because I've got a double barrier. This is reading the chart. What else can we see? You hear people talk about imbalance, fair value gaps, all of these different things. Right? They're not as clean cut as you think they are. They are an area of interest that a lot of buying or selling activity happened within that candle. It's called a power shift because the shift from just standard buying and selling went in a single direction, but there was a buyer and a seller on either side of the equation. There has to be. What it does, it creates kind of, they call it imbalance, but it's just really an area of interest because the market might probe back to it. It's because the market has a memory of where a lot of activity happened, and it happens to be within that candle. Now, also within those candles, you're going to have people that are caught on the wrong side of the trade. You're going to have opposing positions, which will naturally create a retracement to it. Now, the problem with these imbalances is, I watched a video where it says, oh yeah, they have to refill eventually. Well, that's like saying it has to go to zero eventually. It doesn't, because if you go back in time, you will see a lot of these candles are never filled. It never even goes back to them. But what does it do go back to? A level, a fib, an overextended candle. And within the overextended candle, if you start marking it out, the imbalance is normally within inside a key fib point. It's normally around the either the 38 up to the 61, because depending on how you draw it, it's the same upside down. It's why the 50 becomes important. It's the pivot. So sometimes when you look at a chart, you think you're hearing and seeing new things. It's not new. I was doing this 15 years ago, but I was doing it on daily charts. And why? Because there's only one thing in the world you want to pay attention to. And it's that. The price. Your indicators, etc., they'll help. They're not the be all and end all of everything. But the price can show you what it wants to show you. In other words, it can show you a direction. If it looks like it's going down, it's going down. If it looks like it's going up, it's going up. If you've got big, ridiculous candles, there's a lot of pressure in a single direction. What will happen with that pressure? It'll run out. When it runs out, it'll look for a constant. What is the constant? It's a level of some description. And if it's looking for in between a level, it'll look for a ratio. And that ratio is the fib. Now you see an imbalance and you put your fib on it. The fib will show you where it's going to go. Just something I wanted to quickly put together for you guys. Because yesterday cleanly highlighted how to mark and read a chart. Catch us all soon.